Joining me today from the Masari Mainnet conference, coming to you live, Ryan Watkins and Jack Purdy. Ryan and Jack are research analysts, and Bitstamp actually recently partnered with Masari on a series of Bitcoin halving reports, and Jack and Ryan actually wrote those reports. So really happy to have you guys on. This conversation is really going to focus on the second report that you guys wrote for us, which was Bitcoin's third halving, a thesis for institutional investment. I think we'll dig into a couple of questions here and pull out some insights from that. Really excited to get rolling. How are you guys today?
Thanks for the intro. Excited to dive in here.
Awesome. All right, guys. So first questions, getting right into it. Stablecoins. They've been booming in 2020. We're seeing a real increased spotlight, not only on stablecoins, but also this concept of the digitalization of fiat currencies. I think it's pretty clear that China is right now leading the charge. The US is investigating this. A lot of other countries are as well. So as we kind of look at this from the institutional lens, what is the potential impact of central bank digital currencies on Bitcoin? Let's start with Ryan.
Yeah, so I think the digitization of money is one of the more important kind of tailwinds for this industry. So kind of like zooming out, there are the centralized cryptocurrencies like Bitcoin and Ethereum, and then we also have these kind of like cryptocurrency inspired currencies like China's new DCEP, and then kind of Libra. And while I kind of think of them, for lack of better words, as like a gateway drug. And what I mean by that, they kind of use very similar technologies that get people comfortable and familiar with cryptocurrencies. So things like using digital wallets to self-custody and transfer funds. Like the more people that we can get exposed to these technologies, and I think projects like Libra and central bank digital currencies will kind of expand the amount of people who at least just get comfortable with the technology, that it's no longer something that is this nebulous kind of concept and this thing that is associated with darknet markets, and it's just kind of like something that no one wants to go near. It gets people feeling safe about learning a little bit more, and hopefully once people try these things out, it kind of piques their curiosity to go and try the good stuff, the decentralized cryptocurrencies.
Yeah, I think Ryan brought up a good point there, in that even though Libra or these central banking digital currencies are going to be inherently like permission blockchains, which to a lot of people in crypto seems dirty or like of a totally different ideology than Bitcoin. The fact of the matter is, in order for that infrastructure to get built out, it's going to force companies to build out this suite of digital wallets, get familiar with public-private key cryptography, which is still a lot of the same like underlying tech stack that they would need to do to build out similar capabilities for Bitcoin. So I think that's beneficial to the space as a whole. What I think actually is probably the most impactful series or like impact of the CBDCs is the fact that it effectively nationalizes banking, right? Like we already have digital money. I mean, I can send Venmo to any of my friends. I can, readily receive money in that sense. But what if, Fed coin comes out, in a couple of years, then that is taking away the responsibility of banking from banks, which, Americans already have their distrust of after 2008. But the one thing people trust less than banks, the government. And so if the Fed is the one operating all these accounts, they have full autonomy, full insight into everyone's finances, the ability to freeze funds, then people are going to step back and say, oh, like it'd be great to have a non-state money, and kind of lead them down the rabbit hole to Bitcoin.
Makes a lot of sense. And I mean, I think I agree with you guys. I think it does definitely help kind of build the case for Bitcoin as the alternative kind of track to what could, I think what will serve as a very, very valuable addition to to different countries' kind of arsenal when it comes to the crisis that we're seeing right now, getting money into people's hands, making it easier to kind of move money around, banking more folks as well to kind of give that, kind of increasing access. Yeah, there's a lot to consider with that for sure. So now kind of moving on, second question here. A lot's been written about Bitcoin and gold as a store of value and as a hedge amidst all this uncertainty in the markets from COVID-19. How are institutional investors thinking about Bitcoin versus gold? Jack, let's start with you this time.
Yeah, so I think that's a great question because it really narrows down the framework for how investors need to think about Bitcoin's role in a diversified portfolio. Right, it occupies a very similar niche to gold as this inflation-resistant, apolitical, uncorrelated asset. And I guess with that last one we saw during extreme drawdowns, everything becomes correlated. But like that's the role it is intended to play, and Bitcoin is very much looking to mirror that of gold. I think that narrative was really solidified with the Paul Tudor Jones news. People in crypto, they love to talk about it, but for good reason, right? This is a famed investor who's been running tens of billions of dollars for longer than most of us have been alive. And so having that solidification of that narrative, and I mean, I think he really drew like a very succinct comparison there, and to kind of paraphrase what his whole macro thesis was about, or how he compared them. He said like traditional hedges like gold, like they've done well historically. Investors, like they're expected to continue to go to gold during times of uncertainty or if they expect inflation. But later on, he says, you got to remember that P&L always wins in the long run. And so with that in mind, the world needs new safe haven assets, and Bitcoin could have a role there. So from that lens, I think investors can look at Bitcoin as this high growth, like blitzscaling startup that became, a unicorn in a couple years and is looking to take down the incumbent gold. In the fact that gold is a near $10 trillion asset, Bitcoin is maybe 2% of that. So the total addressable market, it's already been verified, and so now it's just Bitcoin's for the taking, because not only does it fulfill that role of the censorship-resistant apolitical asset, but it actually extends that functionality in like a very fundamental, meaningful way, where you think about the ideal store of value. It has perfect portability. People can easily, move countries with it. They can send it to family across country. You will never be able to do that with gold, especially like if you're in an oppressive regime. So in that sense, it even increases the addressable market. So when it comes down to making the allocation, it's really like what chunk of that gold market cap you think Bitcoin can take, and then on top of that, what can it do even more so?
I think I largely agree with what Jack said. I think I'll probably slice it up between how do institutional investors like think about the role of Bitcoin in a portfolio, and then what are the differences between Bitcoin and gold. So I think the former, it's I guess the idea here is that it's kind of this almost like call option on a potential store of value. And it's this generally uncorrelated asset that has a I guess when you get there, an attractive risk reward profile. So I guess that's kind of like the mental model. And then what are the differences? I think the differences are that big picture, Bitcoin is this kind of safe haven for the digital age. And what does that mean? So I think the key properties that make Bitcoin different are that it is this, it is an asset that exists on a globally accessible, kind of like censorship-resistant database. And what's interesting about that is that people can hold and transfer wealth by themselves and without any interference. So it's kind of like porting like a system of property rights to wherever you are in the world, which is particularly interesting, perhaps not for people like us in the United States, but for people outside the United States who have had funds in a bank account and had that stolen before, or It's important for a world where there's rising geopolitical tensions, which is the case now, and it's harder to move value in and out of jurisdictions. I think that becomes interesting. So I think, and also I think there's also the digitization of money, kind of that we talked about before. So people getting more familiar with cryptocurrencies, all the things that we discussed in the prior question that gave us some good tailwinds, and then also just kind of demographics. So I think Blockchain Capital, I believe, put out some good research on the demographics behind cryptocurrencies. Just general takeaway that younger generations are more open to cryptocurrencies playing a larger role in the future, and are more willing to buy cryptocurrencies. So when you combine all these different things of like you have these demographic tailwinds, the tailwinds of digitalization of money, and then you have this asset which is kind of like the ultimate safe haven asset for a digital world, or at least potentially. That makes Bitcoin pretty interesting, especially with the global macro backdrop, with inflation as a potential risk that's now on the table, and also is the risk reward on something like Bitcoin if these trends were to play out. There's a lot of upside to say the least.
Awesome. And yeah, I think that kind of dovetails nicely into like the last question here, which kind of takes the, kind of looking at the other side of this, but, to what extent does Bitcoin need institutions to succeed? And what role do you guys see institutions playing in the Bitcoin ecosystem going forward as this decade progresses?
Yeah, I guess I'll kind of start it off. So I think that kind of depends on like the definition of success, right? Like what is success for this 10-year-old digital asset? But the way I think about it is it's not going to succeed if it just continues as this asset living on the fringes of the financial world, where it's in the hundreds of billions of dollars. Yeah, people trade it, people make money, people lose money, but doesn't really have any like long-lasting, like fundamentally like world-changing effects. And I know that can sound crazy, but for me, like I think it absolutely can redefine how global monetary policy is constructed. I think like it can keep central banks like having more, or I guess just more reasonable monetary policy by acting as like this hard asset that allow people to opt out of the fiat system if it gets too crazy. And so in order to reach that level of success, I think like technically it doesn't need institutions, but practically it does. And what I mean, so it could have this grassroots effort that it's just like adopted by everyone in the world, or all retail users, people are starting to adopt it that way. But if in order to reach that level of success, like price does matter. People like to say, "Oh, I'm here for the technology," but adoption inherently means price, and that's where a lot of, that's where the investable money is. It's with these institutions, and so getting them bought into this narrative of digital gold, of this call option on this inflationary resistant asset. So I think in order to reach a level of success, yes, it needs institution. It needs to have robust institutional lending, derivatives, to have effectively functioning markets. So we're not having, I think, what was kind of like a systemic issue, what we saw on Black Thursday when the price dropped 50%. It wasn't because there was 50% less demand. It was this cascading level of liquidations that led to more selling pressure and kind of really even scared institutions away. So it's going to be like a gradual process, but everything is clearly trending in the right direction. I think that's pretty evident if you follow where a lot of smart money is going nowadays, and not only like thinking of like buying Bitcoin, but just buying this institutional infrastructure to fulfill that vision of what it could become.
Pretty much agree with Jack. I think the grassroots, movement or beginnings of Bitcoin are kind of what makes it, interesting, and this kind of like myth of, this pseudonymous person or persons that created kind of what's a people's money. And I think the grassroots ethos is definitely important to it. These values that the grassroots community has instilled into Bitcoin are what enables it to have many of the properties it has. But like Jack said, I mean, as a store of value, adoption is price. I mean, there's just no way of getting around it, right? I mean, if something's successful at storing value, it means, or if this becomes successful as a sovereign store of value, it needs to, people need to put money into it, trust this network with wealth. So I think, in two senses, like institutions are needed. So I think on one hand, you need institutional investors to come in the space and begin allocating funds. Because, who are these institutional investors in the first place? It's not like they're just investing, some random funds they get out of nowhere. This is people's wealth that they're managing, and you need to bring people's wealth into this asset class to become valuable. And then I think the second angle of it is like the institutions that provide access and that people interact with cryptocurrencies through. I think those are also important. So those are everything from exchanges like Bitstamp that provide liquidity to Bitcoin, which is incredibly important. Making sure that there's Jack said well functioning and liquid markets, and at the end of the day, just ways to move value, both ways, but into cryptocurrencies, so that people can, access this technology. So I think institutions play a very important role as much as we're striving for this vision of decentralization and disintermediation.
Yeah, and I will caveat that institutions are needed in that. That's not to say, okay, Bitcoin won't succeed unless everyone is pouring their money into an ETF, right? Like there's a delicate balance to strike, where I think like self-custody plays an enormous role. Like you still need to have money in the hands, like in your own control. Like that's what makes Bitcoin so special. But in order to get people to that point, you almost like need the institutional players to come in and like solidify that, okay, this thing is real, to get people over the hump of like, now I'm comfortable putting my own money in it because, oh, these trusted people do as well.
Yeah, it's part of the, it's like a crucial part of the transition period, right? Like it's what helps get us to this this new world with all these different crypto assets. Really, it's kind of like the bridge there.
Yeah, I think it's a great place to leave it. But agree. I mean, having been in this space now for almost 7 years, it's amazing to kind of see everything begin with Bitcoin, start to grow with ETH in terms of like the actual like selection of crypto assets out there. The emergence of stablecoins seems like a very natural bridge between these two worlds that kind of didn't exist before. And then now kind of the entrance of institutions in a more meaningful way just kind of seems like potentially the next jumping off point to kind of take this emerging asset class to another level. And then, the world events and what's been going on in the geopolitical situation just kind of serve as just another reminder of the importance of having an alternative currency or an alternative store of value that's kind of disintermediated from the federal system. So yeah, it's been interesting. Can't wait to see, if we have this conversation in 5 years, I think it would be might be completely different. And I think, given how much things have jumped in the last 5 years, future looks pretty bright.
Yeah, definitely.
So
Awesome.
slot us in for a part 2 then.
Yeah, we'll book that for Mainnet 2025. So let's get that on the books. But it was great talking to you guys. So where can everyone find you and read your latest research? Yeah,
so all of our research is published on the Messari website. We're both pretty active on Twitter. Yeah.
Sounds good. Yeah, we'll drop your your Twitter handles and all the info into the show notes. But thanks again for joining us, guys. And if you all want to learn a little bit more about Bitstamp, just visit us at bitstamp.net or follow us on Twitter, Facebook, or LinkedIn. We're very active on there. Ryan and Jack, thanks again for hopping on. Talk to you guys soon.
Thank you, and everyone, make sure to read the Sorry Bitstamp Halving Report.
Absolutely, absolutely. Great plug.
Thanks
See you guys.
for having us.
All right.